Record-Keeping and Taxes, prepared for and presented at the 2018 Square One Entrepreneurship Training Program. Square One is a program of the Center for Emerging Technologies. CET is an affiliate of the Cortex Innovation Community. Square One is funded in part by the Missouri Technology Corporation.
Most of you all are startups, is that correct? Everybody's pretty young in your businesses. So just to kind of familiarize yourself with some terms and kind of get you with the lingo and starting to understand when you're having conversations about your financing and your accounting work. The slides that I'll have here are going to be kind of basic, and we'll just go through some things. Some of it most of you all are pretty familiar with, but I figured we'd just hit on it. Starting with Internal Revenue Service, what new business owners need to know. Many times I run into clients in startups that really are practicing a hobby, and it's not necessarily a business at this point. And we have to help them understand, what is IRS looking at when they start to make a determination over time if you are really actually a business, and if you are producing income, if your expenses are legit and everything is relatively related, and you're not just kind of, doing things at your convenience and, give or take a little bit here or there, and you say you're a business, but it really is a hobby. It's just an active hobby is what I would consider it as. Selecting the business structure. Are there any sole proprietors in the room? Or is okay. So we've got a couple of those, some LLCs, single member LLCs, corporations, any partnerships? No partners, okay. Well, that's good. Everybody has that structure in place. So you're familiar with your federal ID number. You were familiar with your fiscal year or calendar year. Do we have fiscal year users in the room? Anyone? Or is everybody operating on a calendar? Calendar is going to be January to December. Fiscal is going to be any other month other than the January to December month end start and ending. Put a couple of resources, and I try to include resources just for you all to explore on your own. I am a avid believer that the best knowledge is the one that you explore on your own. And as much information that you'll get from other people, advising you and what have you, but I think as you grow, when you kind of, get in there and start to read on your own, look at examples, it kind of makes more sense to you when you're speaking with other individuals about your business. For the state of Missouri, I didn't put anything in here for Illinois. Is there anyone in Illinois operating a business? Okay, so good. All right, so for Missouri, you start by registering your business with the Secretary of State and getting your charter and your articles of incorporation in place. The annual reports, a lot of times, young business owners will negate filing those annually. I can't stress it enough to file your annual reports on time. Because what that does is that tells the state that, yes, I am in business, my board members are still who they are, we still hold the same offices, or if there are any changes, that's where you make those changes. And if you do not do that, many times when someone's searching your business out on the Missouri website, Secretary of State website, they can go in and see that either you've not filed timely and they'll dissolve your business. So you do want to pay attention to that and keep that active. Missouri Department of Revenue, with employment taxes, is there anyone in here who has employees? Okay, all right. So for Missouri Department of Revenue, the employment tax identification number is very important. And when you go and register your business with the Secretary of State, many times you can go ahead and file that application to get the business registered where you get your withholding identification number, which you would use for employment tax purposes. So they would help to determine what your filing frequency is. Most cases, Missouri now is having you file your Missouri 941s on a monthly basis, just getting started. So that would be a frequency that you would be accustomed to getting. The Division of Employment Security, of course, you've got that falling in place depending on the number of employees you have and what the threshold of your pay will be. That Division of Employment Security will be an important piece. Sales tax, we do have some manufacturing businesses, is that correct? Okay, so the sales tax will apply to you. Can't stress it enough. Sales tax can haunt you. It is important that you understand your filing compliance piece. And when I say filing compliance piece, there is a time cycle for you to file your sales tax reports. And when you don't file them timely, there is a penalty that will be imposed for each month that you're late, in addition to the interest. So it's important that for sales tax that you don't take that lightly, because it can add up on you.
Might that also apply to internet sales?
Yes. Oh, yes. Very good. Thank you, Chrissy. And by the way, let's go back a little bit on Internal Revenue Service. The sales tax that is going cross states now, the IRS has launched a whole new program as of, this is 18, so as of 16, where the e-commerce, and you can find more information on it out on the government website on the irs.gov. But they are now going to be auditing, and they're giving you a chance to kind of get started with what the guidelines are. But they're treating those sales, as taxable events. Whereas before, you could get by with having, your sales across the internet and not be tracked and considered taxable income. So now that is something you do want to pay attention to. Yes.
Because I've had to deal with this recently. I just moved from Georgia and my business is in Georgia. But I was told that because I have to file every month, that if I'm in Georgia online technically, making a sale to another state, I don't have to pay those taxes, but I claim them as revenue?
Yes.
Okay. So
But and it's from state to state, and that's the part that's very tricky right now, because everybody is not on board. And I think there is maybe, I may not be exact on this, but I want to say there's about 11 states out of the 50 states that right now do not have guidelines set for their state sales tax for the e-commerce. But that is depending on who you're selling to or where you're selling from. You do want to make sure you're aware of those rules. Very good questions. Thank you. Let's go to the next one. Yes.
Somebody told me service would not be charged for sales tax.
Yes, that's correct.
Is it correct?
Yes.
What kind of service?
Well, it just depends, and that would be, what service are you in?
Testing service.
Testing?
Yeah, like lab testing.
I'm not really certain on that one. I want to say no, but I would not, without researching it a little further. I can follow up with that on you. We can talk a little bit afterwards. Sure, I would love to do that. Yes.
So, similar to what you were mentioning, when you, what if you go and do a pop-up in a different state than where you're registered? Do you just not do sales tax?
No.
Or how does that?
No. Well, that's no. You'll want to, the problem is that if you're going to be moved from state to state, you want to be knowledgeable about those state requirements for your pop-up business, because that's a violation in itself. Because every state, I do know every state does have a sales tax guideline, so you just have to understand how it applies to you for, the time frame you're going to be there, what their registration piece is, because they may even have municipality guidelines. And so that's becoming a really big issue, because municipalities are getting involved in the game now to say, hey, we're missing money that we can't get from our state, so we can set our own guidelines. If you cross this street, the rate changes to another, number.
And that could be huge just here in
That's here.
St. Louis
It's
area.
very big.
87, 89 municipalities at this point. I can't keep
Yes.
track of how many.
And even more so as we get to the city, you can see that St. Louis and Kansas City, Missouri are the only two states that have the earnings tax. And so you even have another layer that, depending on where you're selling and how it will impact you as well.
My question for you would be, I'm doing cars, and people just pay their taxes when they get their title or their license plate. So do I have to charge them for that sales tax?
Of course.
And then they have to go and pay it again? And
Well,
license
a part of the way you set up your bill of sale, you should have the sales tax incorporated in it. So they should be making the sales tax payment. And a lot of these dealers are now getting really sophisticated where they are paying it for you. They bill it into the bill, and they pay it for you, so you pull off the lot and you're scot-free, but it's already been charged. You've already paid for it.
Okay,
So you can.
in that transaction.
Yes, it can be that way. But the other part to that is that if you do not charge it into the transaction, do make the customer know this is the time frame that this sales tax, and what governs with that as well. Because you don't want to leave them, you want the sale, but you do want to make sure that you're compliant as well as being, doing due diligence, just to make your customer knowledgeable.
Right, but it'd be possible for them to drive off without paying that sales tax.
Oh, they're doing it every day, yeah. Yeah, they're doing it.
At the license bureau.
Yeah, they're doing it every day.
Back in the
Yes.
state of Missouri, annual reports, does that apply to sole proprietorships?
No,
Okay.
no. But, and that's why I wanted to start that off. Thank you, that's a good question, because when you register with the Secretary of State, if you are a sole proprietor, many of these items, guidelines won't fall with you as far as the governing for reporting purposes. And so the annual report is one. Okay, any other questions? Those are all good questions. Thank you.
Yeah, I have a registered company and I got the IN number also. Then I went to the bank to open an account. Then they are charging operating, every something, every month, somebody 20, somebody 30. So I did not start anything.
You mean your monthly fee,
Yeah.
the service fee,
Yeah.
bank charges? Right now, banks are all over the place. The rules pertain, and I say that, I mean, seriously. Some of the fees that I'm seeing that are being charged for just basic things are just all over the place. It is important that if, what structure do you have? Are you a sole proprietor?
LLC.
Okay.
Yeah,
And
no separate partnership.
Okay, and some of the banks, what they're doing now is they can work around your service fees depending on the volume of what you maintain of your deposits or how many transactions that you're processing. Some of that can be waived, and you really have to be vigilant about it when you're working with your banks to say, look, I'm small, I'm just getting started. What program do you have that I fit? And if you don't say those words nowadays, they're just trying to open accounts and get deposits. They're not really in the business of educating you to keep them from earning some cash, So you have to know that's the game they're in, and if you don't pursue it, you'll get stuck in some accounts sometimes that may not be the best fit for you. Yeah, very good. Okay, let's get to the meat of the matter, record keeping. Each and every one of you that are here, yes? Oh, I'm sorry. City of St. Louis, thank you. I'm getting to the meat, I'm sorry. License Collector's Office. Okay, City of St. Louis right now have made some strides, I will say, in the License Collector's Office where in 2015, if you were a home-based business or registered as a home-based business, you could actually get your business license for $50, whereas before it was $200 and $250. And depending on if you had any employees, it would go up depending on how many employees you had. So that's something that I think is a really nice feature because there are hundreds of home-based businesses. People run big businesses out of their home. I run mine out of mine. So I was really happy to learn that I didn't have to pay the larger fee when I went to register again. Yes?
So I just got a Missouri license, or I registered on Missouri, but not in a small county or city. So do I need to do that?
Where do you live? Are you in the city of St. Louis?
No, I'm in Chesterfield.
Okay, so you might want to check with the county.
Oh.
Yeah. Checking with the county on that one. For the collector of revenue, the earnings tax department, I noted some forms up there, the P10, W10, E6, they are all related to employees. P10 and W10 is the payroll tax and the wage earners tax in the earnings tax division. And so those would be, if you had employees, I think the young lady in the back, those would be pertinent to you. If you either have them working in the city or if they live in the city, they're going to be subjected to this as well. The E234 would be the return that you would send in if you are earning money and needing to pay earnings tax as a self-employed person or an individual with a business in the city, doing city activity. The E6 is if you are issuing 1099s, and to be compliant for city, you would need to send in the E6 and list all of the people that you've issued 1099s to as well. Okay? So the city gets in on this as well when it comes to this reporting piece. Yes?
And I'll point out something for other people that may not have hit it yet. I got called, I forgot to do my business license. I thought I was going to go in there and pay my $250, I think it was.
Mm-hmm.
And then they said, oh, you didn't file your taxes for last year. It's like, we're in a federal state, and I forgot about city taxes.
Yeah.
And it was a loss, but they still needed to file
They want it filed. That's correct. And most of the compliance pieces will be, have met half the battle if you just put your name on the paper. I mean, you just get something filed. It needs to be as accurate as possible, but making sure that you meet deadlines. And I would strongly encourage you to make your calendar and put all of your deadline dates in your calendar just as reminders, because then that way you get yourself, you're not behind, on the 8 ball with really trying to stay compliant. So if you give yourself, a month window to say, okay, next month I know I've got to file my quarterly tax report, or I need to file the sales tax report each month by the 15th, or, set some deadlines for yourself in your calendars. And it really will make a difference in how you think about your business as you go along with the activity.
One more quick question.
Yes.
1099s are issued for contract work, right?
Correct.
And then what threshold is it that you have to, is there a dollar amount when I have to serve the 1099?
Yes, very good question, and I'll go into that 1099 thing because that's an animal all by itself. 1099s are issued when you have paid out $600 or more. And that can be multiple increments, but when it hits the $600 threshold, you are at that point by the close of the year required to give that person you've paid a 1099. Okay? I'll go a step further with that. There is a form SS8. If you were to ever not be sure if you should be issuing 1099s or not, that is a form that IRS has that will help determine that for you. Okay? And just by using I'll get you just one second. Just by using the form alone, going through the questions, which is about a 3-page form of questions, it will help you determine, you'll kind of know the answers that you're giving to say, this is an employee versus a 1099. Okay?
Though I had a loss, I still haven't filled mine out yet. I have to list all of those people I
That's right.
1099s to
That's
on
right.
the form, and I have to list all kinds of expenses in
Yes.
there. So that one's not just to fill your name
Yeah.
in, you got to do some work.
Yeah.
On your taxes.
Yeah, and it covers the payroll piece, it covers the 1099 piece, because you have to know that the city is trying to see where the money is going. That's really all they're doing. They're just trying to trace your activity, however you do it, whether it be independent contractors or employees or just even your own income for the business that you're operating, okay? Okay, fun part, record keeping. Most of the clients that I have do not like to record keep. I'll just tell you, I mean, I have to work with them. It's a fight. I've had them over 30 years. I've probably seen a variety of scenarios that some I don't want to tell you about, but I'll tell you the good ones. The ones that come to me with, whether it be an Excel spreadsheet or whether it be a notebook, and listed out all their categories and classified all of where their expenses are going and where their money is coming from. I love those because those are the people that make me say they're taking their business serious. When clients come in and they have a bag of receipts, which I think is a good step, I don't want to negate that. That's a good step, that you have a bag of receipts, you don't have your bank statements, or you may not even run your money through your bank. You may have just invoices to show that you got paid, and you may have gone and cashed checks all over the place with other people's banks or where have. I mean, trust me, I'm like, you're really hustling to earn that money, but you could do it much simpler if you just open a bank account or use your bank account. But nowadays, it is so simple. Record keeping is so simple now. First off, with all this online activity, getting a debit card, either getting a bank credit card or what have you, you won't have to keep your records. You can just swipe and, use your online activity, and it does a wonderful job of tracking all the information. You would take those bank statements, any of that information, and any accountant would be able to cipher and paint the picture of what your business looks like in any period of time that you provide them that information for. So I would encourage everyone in some way, come up with whatever works for you, because some people are still very manual, and that's okay too. But find a way to document information and make it easy for yourself. And if you just keep up with it, if it's just once a month, or if it's every 6 weeks, because everybody has a cycle where they say, okay, I'll sit down and make me a list or figure out what I've been doing. But it is so important, I can't stress it enough, because then you are in tune with what your business is really doing. You really know, did I make that much money last month? Or did I spend that much money last month? I mean, and it makes such a difference in the business decisions that you make going forward, and even how you plan. You'll start to see your business in a whole new view when you start to document and keep up with your records. So whatever record keeping filing system that you may devise, it's up to you, but there's many of them out there. I use QuickBooks Online. Most of the clients that I work with, 90% of them, I use QuickBooks Online. I'm a certified pro advisor for QuickBooks Online, and setting up the records, maintaining the records, processing payrolls, and doing the day-to-day work with those files. But if that doesn't work for you, and QuickBooks is pretty user-friendly, there's so many other ones out there that are still, will do the job just as well. And you don't necessarily have to be an accountant or have had a lot of accounting experience to get through them. But if that doesn't work for you, then just a simple Excel spreadsheet, listing all of your sources of income, how much it is, what month you received it in, all of your expenses, how much they were, where did they come from, list the names of the vendors, simple. Okay. Tracking those expenses in the fixed assets. There are some people in here that I'm sure will have either equipment of some sort that, maybe $1,000 or more, or a sizable piece of an expense that you are going to want to log that asset and understand if it has a depreciation value, which will help for tax credits for you. The liabilities that you will incur will be over and above maybe some loans that you may have, whether they be intercompany loans or personal loans or family loans or, someone that's helping you to get your business started. But those will be listed in your liabilities area. And then your equity is going to be either what investment capital that you've made into the business out of your pocket, or even whatever has grown to grow the business and what the value of that will be for you. The financials, and of course the accounting software, the spreadsheets and all of that will support that as well. For your financial statements, this is what tells the story. The balance sheet is going to tell the story of, based on whatever time period that you look for that information, it's going to tell the story of what your business is worth. It has the assets starting at the top, and I think we've got some examples here. Okay, yeah, here's the balance sheet. A little small, sorry if it's a little small, but it'll be a part of the information that they have access. Okay, so you'll have the assets on the left side, the liabilities, and this can run, the formatting can be as you see it, or it could all be in one portrait style. But the assets, your liabilities, and your equity is the standard format for a balance sheet. And the balance sheet is gonna always tell the worth of what the business is. So anyone can look at your balance sheet, and you may get asked, can I see your balance sheet? They're wanting to understand what the value of your business is, or what kind of activity you've got going on with it, okay? We'll go back a little bit here. The profit and loss, and some of you may have people to ask you for your statement of income or profit and loss. Either way, it's all the same, okay?
Fixed assets.
I'm sorry, baby, anyway.
When we bring something from our personal lives into that business, whether it's a piece of equipment or what have you, how do you depreciate that over and what kind of time frame? 1 year, 5 years?
Well, it depends on, there's a depreciation schedule, and it's all based on what the actual asset is. And it will depend on also a really important thing that you just said, that you already owned. And you're giving it to the business. So if you're giving it to the business, what is the worth on the day that it becomes the business's? Okay, that's a major decision you'll need to get an answer to.
Right.
For example, if you have tools, if you've purchased those tools, how long have you had the tools?
2 years.
Okay, and if January of 18 you decided to have those tools belong to your business, then what is the fair market value of those tools on the day that they become the businesses? They're not yours any longer. They become under the ownership of the business. That's going to be a question that you want to get answered. So if you were buying them, say, used or wholesale or what have you, you would want to know what that worth is at the time it becomes under the business's name. So it's like a book value, like if you were a car that's used and you then loan it to the business.
And how do you figure that out? I mean,
Well, you can go online, you can go online and see what people are selling that same item for. Yeah, market value.
are they used to?
Right. And you want to be specific though, depending on what that tool is, because, it may not have that same value if, when you decide to turn it over to the business versus when you bought it. So you want to know what the life is, because tools in most cases are going to fall in a 5-year category. And there's a schedule, there's a publication 535, which is depreciation publication that's under the IRS.gov. 535, depreciation. That's a fun one for you. Trust me.
Does it make it that everything?
It will. Yeah. Get your marker out. You might even want to get some colors. It's more than one color because it's that deep. And the depreciation publication will also have the schedules in there. It'll have the amortization schedule. It'll have basic definitions to really help you understand what that means for you and your business as you grow and add other tools on. Okay? Very good question. And I like this, you all. Please, I want to be able to answer questions that meet your needs. So some of this is kind of general, but if you have questions that you'd like to pose, please do that. Okay? Income. This, we kind of, we can kind of hit this a bit because everything, when I was speaking earlier about classifications, chart of accounts is basically that. That's all it is just saying, I'm getting my money from sales of product or I'm getting my money from service, when you talk about the income. You name, if you're getting it from grants, you get, wherever you're getting it from. If it's a bank loan or whatever, you want to indicate where you're getting the money from. So that's going to come from your income. The expenses are going to be just that. Anything that's not an asset that's going to have a value that'll have a long term to it will be more than likely a level of an expense for you. Unless you are having cost of goods sold, and that means that you're making some expenses that will help to build a product, a finished product, then that would be considered a part of the cost of goods sold for you. Fixed assets are going to be vehicles, buildings, land, parcels, tools, equipment, that type of thing. Liabilities, again, I spoke on that earlier, just loans and what debt do you have, okay? And the equity, of course, when you subtract the assets, subtract the liabilities from the assets, that's going to give you what the worth of the business is. Financial statements, we kind of hit on the balance sheet already. Did anybody have any questions about balance sheets, just in general? What about income statements? Because income statement is the same thing as a profit and loss. It just depends on, what position that you're using it for. A lot of times nonprofits will say statement of activity or income statement. You'll see that different ways, but it's all the same thing, basically.
When you're talking about an income statement, how do you handle something that you have that you're not going to be putting in? Like, let's say you have a project where you're offering a service, and there's a project where you send an invoice at the beginning of the project, and you send an invoice at the end of the project. How do you incorporate that into thinking about income in terms of, let's say that statement is only for 1 month, and you have the initiation payment that came in, but then another couple months later, the other payment comes in. So, is that far off income relative to?
Okay. Well, you get on, and these are some good things to discuss and make a determination on, because if you are operating on a cash basis or an accrual basis, we'll make that determination for you. Cash basis is going to be when I provide you the service, I get paid. Accrual basis is I can get paid at a later date, whether it's tomorrow, it's a later date. And so you're speaking of a progress payment. That would be where you will have issued your invoice, and you will have said the terms that I've given you to pay me may be 90 days out or whatever. And so that's a progress payment where you'll get a portion of the money or deposit or whatever up front, and then everything will be satisfied, within the time frame that you give them. So on your income statement, that's basically going to reflect in the period that you've received all the money in to say that customer's invoice is fully paid. Otherwise, it'll be a partial payment. You'll still have an outstanding balance on it.
And as young companies, are there some benefits to running on a cash basis versus an accrual basis from a tax perspective?
It depends, Christy. You know, it depends on the type of business that you have. For example, if you are in a service, it could very, and I'm speaking for myself, it could very well benefit me sometimes when I run a lot of business activity, like I'm closing out accounts in November, December, and I may not get that payment until late January. Just simply because I'm getting ready to offer, I've closed them out in accounting work, but I'm about to offer them tax work as well. And so they'll pay me at the end of the tax bill for everything. So that can happen very easily. Yes.
Just to chime in here on a couple things, from a cash versus accrual perspective, if you're a single member LLC or sole proprietorship, you might want to reflect your books on the accrual basis. However, your tax return will have to be a cash basis because us as individuals are cash basis taxpayers, so we don't actually get to make that choice unless you're a C Corp or an S Corp. But if you're an LLC or a sole proprietor, so a lot of our clients get confused because we create their books on accrual basis, but then when they go to do their taxes, we'll have to make a couple adjustments because they didn't get that cash until January, but they provided the service in November, December, and so they want to recognize that revenue. But also to your point, if you owe somebody the services later on, but you're getting paid now, so like, let's say they're paying you for 4 months worth of time, usually if you're an accrual basis, you would handle that as deferred revenue. So I don't know if you've heard of that term, but that actually ends up being a liability on your books because you then owe them 3 more months of service. That gets a little confusing, especially like for software companies. There's some programs that can kind of help you track that, but deferred revenue is kind of the main concept there. It has to do with revenue recognition, and it gets a little tricky.
A little tricky, right. And I thank you for pointing that out because to some degree, I'm trying to meet the need just based on where I'm thinking everybody's at. But yeah, the deferred piece is a big deal. And when you get in those scenarios, you do want to fully understand that. And you do want to have someone that's keeping your books that understands that. Because tracking that data is critical. And I mean, critical to the point to say how it will impact you for the tax return. So it's really important to know that. Thank you for pointing that out. Yes.
Hi. So just commenting on one of the teachers of the class, and I really love this discussion. I want to just make sure I'm following because it went by pretty quick there. So for most early stage companies, we generally recommend using the cash basis because if you're an S Corp or a pass-through entity like an LLC, it's going to be required for a tax accounting anyway. And also, as a practical matter, unless you're buying a lot of really expensive equipment, then generally speaking, the only thing that you're going to have to report earlier under accrual, sales for which you haven't received cash yet, and that's misleading and confusing until you're a much bigger company. So here's my question. So if you keep your books in QuickBooks and you do it on the accrual basis, isn't it true that you can just switch a button basically and then it shows what it would look like as cash basis?
Yes.
Assuming you entered stuff correctly.
Yeah.
Otherwise, it's garbage in, garbage out.
Right.
Exactly.
And because, for example, if you've been keeping your books on the accrual basis, and let's say you get your bill from your attorney, and they're always several months late. If you are an accrual basis books, you're going to book that as a liability during the month in which they provided the services. And if you go to QuickBooks and change it to cash, it's not going to know. It could get confused. Let's just say that.
So then maybe the recommendation is to keep the books under the cash basis, and then do accrual if you have to.
Well, I don't want to steer I can comment on that maybe in my talk.
I think
maybe cover that.
I get your point. What you're asking as far as a young business being cash and not having to have that scenario occur. The only part that I would warn against that is that when you have cash coming in, I mean, you've provided a service that you didn't get paid for. And so you want to account for that to some degree. And so if you don't have that listed as deferred revenue, and it will show up as, it will literally be a liability against you. And going in QuickBooks and changing that, you're distorting the figures. It's not going to have a true reflection of what your statement should be.
Yeah.
So you want to be careful of that, because you can do it. QuickBooks makes it very convenient for you to go in and change things, you know, from whatever period you want to, but I don't want to encourage that. I think you need to make sure that you fully understand, and the person who's keeping your books is knowledgeable about how that works.
Well, so there you go. I think that's the key point. You know, unless you really want to learn all this stuff, use a bookkeeper that's reputable and, you know, whose finances is checked. That's what I always do, and I've been doing this for 30 years.
Yeah, I agree. Thank you all. This is good. I like all this. This is good stuff.
It's easy to change that report. The IRS has just got an incredible sense of humor about this.
Well, you know, the thing, and I'll just throw this in. This year, as a result of all the changes that are going on, the next 2 years as tax preparers, we've already been warned, it will be a nightmare for us. The changes that are occurring with taxation have not been changed in 30 years, since 1986. And so a lot of what's coming down the pipeline right now will definitely be audited, because people will not be understanding of what they've been accustomed to doing for years, and they're going to want to do it still on this year's return, and it's not going to fly. You can guarantee that in 19 and in 20 you will be being audited just on the old practices, simply because you want to take, you know, advantage of what the laws have been before. And everybody is just not on board with realizing the impact that this tax law changes that are coming along right now. So I just want to say to you all, you know, be proactive when getting prepared, getting your returns prepared, and ask more and more and more questions, especially with you being business owners. And I would not think that you would be going too far to push the button with your preparer or your accountant to say, you know what, I want to see my return, but can we have a consultation meeting, and can we sit down and talk through it, because I want to understand what I'm doing now that's going to benefit me for the future because of what's changed. That's a very good question to ask. Because of what's changed, how do I go forward? Okay? Because as a preparer, we're stuck in the places we've been in for 30 years with just knowing the law and adding on with whatever addendums they make, whatever slight tweaks they make with the law, you know, based on rates or what have you. But I mean, this is a massive overhaul with law. And so, I mean, I just can't say it enough. I think it's important that you all be very vigilant about preparing your taxes and understanding what's going on with your businesses when it comes to the taxes for this year. Okay, enough of my soapbox on that one. The statement of change, cash flow statement is, of course, is going to be, you know, discussing the operations, the investments, and the finances, and how that flows for your business and the planning with that. A lot of that will be impacted by budgeting as well. So that's something that, you know, as you grow your business, and even I think maybe in the next portion, Christy, they'll focus a little bit more on that. And the statement of change is really just reflecting in the equity. Okay. I like all of this discussion. Thank you all. So these are the statements, sample statements, and they're part of it. Bookkeeper versus accountant. And this is important for you to understand as well. A bookkeeper is a person who is in your day-to-day. If you just keep it simple. The bookkeeper is the person, whether it's a wife or husband, son or daughter, whomever, that's keeping up with the receipts and making the deposits in the bank and writing the checks and paying the bills and what have you. They keep you organized, and they're consistent with what they do, okay? They enter the bills, the invoices, pay the record, you know, pay taxes, reconcile the bank account, and which, by the way, please reconcile your bank accounts.
And push the button that says reconcile. Don't just do it in your head.
I'm telling you, I get people that have never reconciled. I'm like, really? How did you function? I mean, you never reconciled your business account, but okay.
And so a lot of us might be like acting in the role of bookkeeper.
Yeah.
Right?
Right.
So these are the things you should be doing.
Yes, you should be doing these. Correct. And the tax payments and even recording those as well. Yes.
What does reconcile mean?
Reconcile means that everything that went out, you have accounted for, and everything that you put in, you have accounted for. And there's a balance either left or either you're negative, one or the other. But it's all in and out, so you know what really was there and that it's all accounted for. Yeah. And thank you, because sometimes people will ask that. It's just very simple, but you still don't know and you want to know. So thank you. The accountant would be the person that would perform all of those other bookkeeping activities if need be, but they also would perform analyzing and advising you based on the financial data that you provide to them for your further business decisions that you're making. I can't stress enough, when you have an accountant that's working with you actively, you're communicating with them, you're involving them on the business decisions you're making or even ideas of what you're thinking about, that you have them involved in that process. Don't leave them out. Don't say, oh, well, I went and bought a building. Could we have talked about it? I mean, could you have just kind of let me know that you were going to do that? I could tell you maybe if this was a good time for you, just looking at your financial statements, that might not have been the best move right now, or, for what you say you want to do in 2 months, or just things of that nature that you're in the moment, it's a good deal, you don't want to pass it up, but I still think about it for a day and just at least run it by your accountant. That's one of the things I advise, yes.
How do you determine between the two of them? Is it a certification that you should be looking for? Like if somebody says they're an accountant versus a bookkeeper, how do you?
Very good. Because the compliance and the due diligence now that's going forward, as of right now, the tax laws for preparers has changed. So that is a critical piece too, because certifications now that we have to have, whether you're an enrolled agent or a public accountant or a CPA, is certified through the Internal Revenue Service. We have a badge, we get what we call a P10 as a preparer, and that P10 is going to say that you are recognized and you've met the compliance requirements for Internal Revenue Service to process tax returns and to prepare taxes, okay? As an accountant, there's, if you're a public accountant at this point, the certifications process is just testing, general testing for us, and getting your continuing education requirements. And so a good question you could ask your accountant if they're not a CPA or an enrolled agent is, are you registered under the state of Missouri with your continuing education? The continuing education is the piece for myself, with me not being an enrolled agent or a CPA, that keeps me in the loop of all of the practices and in compliance with guidelines among the state.
Are there any other questions that you should be asking? Either one, like you have to pick between different accountants. Are there any other questions that you should be wary of asking to make sure that they're the right person for you? I land on the side of caution with referrals. I really am big on referrals because people will tell you, I could sell you my business if that's what I needed to do, if it was just you and I. But I'd like for you to talk with customers of mine. Ask, is there anyone that you can refer me to that you're already working with? I'd like to just have a conversation with them about the services you've provided. There should not be any business owner that would be afraid or shy from giving you giving you someone that can discuss their experience in working with them. The other things that you can do is that, if everything's online and you can Google people and go to Better Business Bureau. There's other ways of really just seeing if there's any dings out there on people that would help you know if they're practicing good business. Yes?
One of the things you can ask is their communication style and preferences.
Mm-hmm.
Make sure that matches with you. If you like to communicate electronically, make sure that's
Yes.
them. If you are very detailed in your conversations, so check for what I call cultural fit as much as their expertise. If you like this person,
Very good.
you're going to tell them your business.
Right. And to even add on to that, it is so important that you want your accountant or your bookkeeper to be your partner. And a partner in a way that I'm comfortable to talk to you, the confidentiality of what I share with you about what I'm doing and how I'm doing it. If I'm doing it right or whether I'm doing it wrong, I'm going to trust you to lead me the right way. And in that process, I'm learning, and also in that process, I'm entrusting in you and your expertise. And so, you know, it's a win-win situation if you put it on the table and in any way that you don't feel that you're getting what you deserve out of the relationship, to pull out of it. And to make sure that they're offering you a contract or an engagement letter of some sort, not just saying, hey, bring your stuff over and we're gonna talk about it. I'll get it together for you and have it for you next week and I expect my money. No, I need an engagement letter. I need it to be specific about the service, the scope of services that you're providing me. And I need to have some expectations of what I will get from this and the value that it is. So all of that is important. And then also there'll be a significant difference between a bookkeeper and an accountant as far as cost. So that in itself will help you as a determining. Yes.
Do accountants ever specialize in an industry? So
Okay. Yes.
So look for kind of industry specific, and then when in your business should you seek out when things start getting out of control, or?
No, I think where we are right now, you should have already had that conversation. Yeah, I think wherever you are in your business level right now, you should have already had that conversation or be making some appointments to have that. We are in October. Yeah, I'm having conversations right now with my clients about getting their estimated payment, that next estimated payment in based on what these first 9 months look like.
If you're generating revenue or expenses, even if you're not generating revenue, but you are generating expenses that are related to your business,
Yeah.
you should be working with some. Even if you're doing all the bookkeeping, there should be an accountant who you're working with on your taxes. This is not the time to just continue. If you've been doing your taxes all along by yourself, this is not the time to continue.
And I would encourage you, this is ideal time for any accountant right now where you can get an appointment. You can get an appointment now until about Thanksgiving, pretty easily. After Thanksgiving, industry-wide, we are swamped because we're closing out, you know, all of our clients and we're getting ready for tax. We're in tax season mode come December. So I would encourage you tomorrow, you know, just start calling around, you know. Yeah, I mean, really, I just want you to have a chance to be able to, you know, give all your ideas and your questions out. They'll have time to talk to you. After that, time is money. They won't want to hang on the phone. They're not going to do that. So I don't want you to even expect that. That's why I'm saying this is like right now is crunch time to get on somebody's books to say, you know, at least try to get 2 meetings with them. The first one is to initially get out what your ideas are, what you're doing, where you are in your business with your bookkeeping or your taxes, prior history, so they can get a feel for what's going on in your background. That next meeting is going to be an action meeting to say, okay, here's the plan. Based on what we discussed in that first one, now we've got an action plan, and this is the expectation and the timeline that goes with that. Okay? Very good. Okay, the accountant also will be support for audits. So that's another thing. You know, certified public accountant normally are the ones who are the authorized parties for audits, but accountants do all the prep work. The accountant is the one who does the work for the CPA, but the CPA signs off on it just so you have a certified audit. So at some point you will want to have a certified audit in your business, in the life of your business, you know, multiple ones, I'm sure. And I would encourage you to try to have a certified audit at least every 2 to 3 years at minimum. At minimum.
And this isn't the IRS calling you?
No. This is just a legal certified accountant that's certified public accountant that is going to review, and they'll do a sample of all, you know, they won't look at every line item of everything you've ever done, but they'll do a pretty strong sample of all of the information that you have to be able to give you financial statements and a review and recommendations and findings from them. Yes?
Should you get an audit about the same time you actually get an accountant? Or when do you know to get an audit? You know,
well, depends on how far you are in your business. That initial meeting will kind of give some clues to the accountant, as if, you know, we need to be talking about, so let's look at what's happened so far.
So they can kind of...
They can gauge that for you.
Okay.
They can kind of help you with that. But if you just say, you know, all right, hey, I think I need to have my books audited, I don't know what I've done or what I haven't done, then that's a good statement to make. Don't be shy about saying it, you know, depending on where you are.
I never did understand when the person is going to be actually audited. you know, I had a business before, and it was like I was scared. You know, it wasn't a big business. It was like almost a hobby, and it was like, you know, and then it was like I never knew. But anytime somebody say that word, I get scared.
Well, I'll tell you, the
Like,
IRS has
after
some
me.
samples. There are areas, depending on if you're Schedule C filers or 1040 itemized deductions or what have you, the way the whole examination process works is that there are areas that are highly abused areas, just across the board, whether, I don't care what entity that you are. And IRS targets those areas first. There's scores that are given for how they determine when you kick out, when your numbers kick out, when your return is being processed. And so there's a Q score, that's what it's called. And so when that Q score, in some cases, hits a certain threshold to say, you know, there's starting some lights to go off, you know, they may in some cases say, we want to give you a paper audit. And a paper audit will just be that they'll send you a letter and say, we want to question you in reference to some of the information you have, your travel expense, your meals and entertainment, or what have you. And you can just provide them whatever information that they ask you for, the audit is settled. Then there may be a walk-in audit or either a physical audit where they'll ask you to bring those records in. And there's a time frame that will go with that process for how they'll review the file. And it can be some back and forth in between that.
And that's different than you and your.
That's a field audit.
Working together to audit your books.
Yes, oh, that's very different than when you're.
One is required by the IRS.
Right, that's very
One is
different.
part of your due diligence as a business owner.
Correct. Thank you, Christy, yes.
Just to chime in on that, I think most people correctly get that anxiety when they think of the word audit, because it's usually the IRS coming to audit you.
Right.
And most of the time, you're not going to really want to pay. I mean, audit, you know, could cost up to even more than at least $30,000 to get, you know, a CPA firm to audit you. So usually that's not really going to be relevant or a good use of your money unless you have outside investors who are then usually saying, hey, we want to make sure everything's good because I just wrote you $1 million check.
Right.
So that, okay, you spend the $30,000, right? But if it's your own business, another thing you could do sometimes is get a review, which is a similar thing like Kimberly said in terms of they'll do some checking, they'll examine randomly some transactions. You don't have the audit opinion, but instead it's a review opinion. And a lot of times when you're raising money and it's smaller amounts, that's just as good, and that might cost $15,000
Right.
or even lower, depending on the activity.
Right.
So I just wanted to, you know, like the word audit means a lot of different things to people.
Right.
Yeah.
So,
And I will say too, I worked for IRS for about 8 years early in my career, and don't be afraid of an audit. It's not necessarily a bad thing. You know, if you're practicing and your best practices are pretty strong, don't be afraid of it. Whatever they ask you for, I just always tell people, be organized when you go in for your audit. Have what they ask you for. Don't give them any more than what they ask for. And answer the questions they ask you and leave it there. Don't feed into it, you know, because the agent is reading you at the same time.
So can a business, do every business have to be audited at some point?
No.
Or
No.
not every, okay, it's something that's kind of like an outlier, almost like when you get audited.
Now, there's major businesses that have never been
That's
audited.
what I was
Yeah.
asking, 'cause yeah, okay.
And I like the point that she raised in reference, I'm sorry, I'll get you just 1 second. I like the point that she raised about the investor, because that's in most cases, that's where the self-audit is going to be inflicted. And so be prepared for that, because people are going to want to know, let me make sure my money is going where it's supposed to be going. It's not a lifestyle enhancement for you. It's really growing the business. Yes, sir, I'm sorry.
So I just wanted to try to summarize and make sure we all got that, right? So there's audits for different purposes. There's an IRS audit where they're coming in, and sometimes it's random. Usually it's based on your hitting some kind of tripwire where they say, that's odd. And they want to dig in, and they're going to want to go through your books. So if your books are in good shape, the only time one of my businesses was ever audited, they went through our books and they ended up saying, well, actually you overpaid your taxes slightly, okay? So that can be a good outcome, all right? So it's not necessarily a bad outcome, so that was a great point. So then there's a whole different other kind of audit where you get a CPA to come in and review all your books in detail, and then they issue a certified opinion.
Right.
They give you an opinion, and they actually sign, they say, this was, what you want there is an unqualified opinion, right? In other words, the auditor said, I looked through the books in detail, I didn't find anything wrong, right? Now, sometimes...
Materially wrong.
Yeah, materially wrong.
Right.
So sometimes, you know, you end up something a little short of that, where they note some deficiencies. And then you work through a plan to fix those deficiencies. So that's something that you do proactively if your business is big enough to justify it, right? To make sure that everything is on the up and up, you know, in case, heaven forbid, the IRS, or even worse, an investor decides that they want to come in and get their own accountant to go through everything, right? So under those kinds of circumstances, when you've got an investor, you know, typically then you gotta have to get that special certification. So basically 2 different categories, and did I get that right?
You did. You hit it right on the money. Thank you all. This is good information, because this is meaty. I mean, this is stuff for the takeaway from it, to say you've got your hand around something now, you can think about it.
One more question, I'm
Yeah,
sorry.
sure.
Now, I hear you say, you know, the IRS, and then what about the city? Like, you know, like St. Louis
Well,
City,
I'll tell you-
or the state, can they come in? and audit?
Yes, they can. But all general audits are going to start from a federal level.
From the federal level?
State
Okay.
is going to accept whatever IRS's status is.
Okay.
So if you are to be audited by IRS,
Okay.
when they finish the audit, they will then adjust your file. Within about 9 to 12, 15 months, somewhere in that range, the state gets that same report. And if there's anything that needs to be adjusted on that state return, it'll come as a result of the records they've received from the audit adjustment that IRS made.
Okay.
Okay? City, they're a little bit, you know, they're further down. Yeah, they're getting there. I'll say that. They are getting there, though. Yeah. Very good. I like all this. One of my last statements is show your bookkeeper or accountant some love. Stay organized. Keep your records and receipts. And this is a big one. Respond timely to their requests. I can't say that enough. Respond timely to their requests, because if there is an issue that your accountant or your bookkeeper has identified that is a compliance piece for you, you are going to want to respond in enough time that they can correct that for you or keep it from becoming an issue of a penalty or not being non-compliant, okay, in some way. Communicate. And of course, I mentioned that earlier about discussing financial decisions with them. I think that might be it. These are some references for some of the examples that were shown with the cash flow statements, balance sheets, income statements that you all can use. And thank you so much for being a good audience.